Hey, everybody, welcome back to Retirement Clarity Radio. My name is Scott Newhouse. Thank you for tuning in on YouTube, listening to me on my podcast, wherever you're at. I really appreciate you being here. I saw an article recently on CNBC that really struck my attention, and that's what we're going to talk about today. So let's just dive right into it. The headline of the article is 61% of Americans paid no federal income taxes in 2020, Tax Policy Center says. And so we're going to go through this article, go through some highlights, not every single detail, goes through some highlights, give you my thoughts on some things that they mention in here. And then I'm going to talk about at the end what this could mean for your taxes, especially in your retirement. So let's get right into it. The key points that they list out in the article are that more than 100 million US households, or 61% of all taxpayers, paid no federal income taxes last year, according to a report from the Tax Policy Center. The pandemic and federal stimulus led to a huge spike in the number of Americans who either owed no federal income tax or received tax credits from the government. So they got money back. They didn't pay income taxes, and they got, some money back in the form of tax credits. The main reasons for the spike, high unemployment, large stimulus checks, and generous tax credit programs, will largely expire after 2022. We'll see about that. Hopefully we get back to normal, but we will see about that. Okay, and we're going to go through the article. So again, more than 100 million US households, or 61% of taxpayers, did not pay federal income tax. The share of Americans who pay zero income taxes is expected to stay high at around 51% this year, 2021, according to the Tax Policy Center. It's expected to fall back down to 42% in 2022 and remain at around 41 or 42% through 2025. And this is a quote, assuming the economy continues to rebound and several temporary tax benefits expire as scheduled, Howard Gleckman from the Tax Policy Center says. We'll see about that. Yeah, we'll see about that. I don't know. It's tough to trust the experts in terms of these future projections 5 years from now. Well, obviously, we've seen in the last 12 to 18 months how quickly things change. So I won't put too much stake in the low 40s numbers that they say here are not going to pay federal income taxes going forward. I hope it's that low, but I'm not sold on that. So we'll see on that. Okay, and then the next paragraph is one that I want to bring up as well. Despite being fleeting, the high number of non-taxpayers is sure to fuel the debate in Congress over higher taxes on the wealthy. Many Democrats say the wealthy do not pay their fair share and cite a series of recent articles in ProPublica showing that billionaires, including Jeff Bezos and Carl Icahn, paid no federal income taxes in certain years. The $3.5 trillion reconciliation bill in Congress is expected to include increases in capital gains taxes, a higher top rate on ordinary income, a higher corporate tax rate, and other measures aimed at those making $400,000 or more. So I want to bring up a couple things on this. One, obviously we hear from Democrats a lot saying that the wealthy don't pay their fair share. So it looks like depending on what happens with this reconciliation bill, they will get some of their tax proposals put into place. The question I have for you, my dear viewer, listener, wherever you're at, is do we think the tax increases are going to end there? And the reason why I ask that is because, we have the Social Security and Medicare trust funds, which are running out and will be dry at some point in the 2030s. We obviously have 61% of people right now not paying into the federal tax system. We have a lower number of people engaged in the workforce participation rate. That's been naggingly low. And then we also have a number of people turning 65 every single day, retiring, and they're claiming their benefits that they have worked for and paid into the system for. And so we have all this confluence of events taking place, which frankly makes me worried that even if Democrats get these tax proposals that they put into plan in the reconciliation bill, even if they get all of them, are they going to stop there? And are they only going to go after folks making $400,000 or more? I don't know. I don't think so. I think there might be more to come, but that's a guess. And I admit that that's a guess. So that's something that you need to think about as well. And let's see if there's anything else in the article for us to point out. This is always interesting. The top 20% of taxpayers paid 78% of federal income taxes in 2020, according to the Tax Policy Center, up from 68% in 2019. And the top 1%, those evil top 1%ers of taxpayers, they paid 28% of taxes in 2020, up from 25% in 2019. So I don't know. That seems like they're paying their fair share to me. But again, that's just an opinion. You do with that what you want. So that's pretty much it that I want to talk about in this article. I'll put a link to this in the show notes description for you to read it if you want to. So again, I got to go back to my last point. Do we think the tax increases are going to stop with what's in this reconciliation bill, or do we think taxes are going to increase above what is potentially going to happen in the reconciliation bill? I personally think that taxes will rise even more in the future. And if you want to combat that, if you want to strategize in these interim years where they're not increasing taxes dramatically, I really do think time is of the essence. And I would encourage you to at least consider making some tax strategy saving moves today and in the subsequent future years so that you can lower the lifetime tax amount that you and your family pay. If you want help understanding the issues that our country faces in terms of taxes, as well as what would your life look like if you don't take these tax saving strategies, as well as what could happen if you do take these tax saving strategies, I really encourage you to pick up or go to my course at retireTaxBomb.com. This is a free course that I made based on a book that I wrote called The Retirement Tax Bomb. And so the course is going to take you everything through what has happened historically with taxes, where we are with taxes today, what you need to do to lower your lifetime tax liability. So again, go to retireTaxBomb.com, give in some quick info, and then you will get free access to the course. If you have any questions, feel free to let me know. I hope you all have a great week. Bye. Thanks again for listening. As a reminder, you should consult with a financial advisor familiar with the specific circumstances of your unique financial situation before making any financial decisions. Nothing in this podcast is a solicitation for the sale or purchase of any securities. Any mentions of rate of return are hypothetical in nature and not a guarantee of future returns. Scott Newhouse, CFP, is an investment advisor representative of Forthright Finances, a California and Nevada registered investment advisor.